Investments in securities are subject to market risks. Read all related documents carefully before investing.
Hello and welcome to the Weekend Investing Daily Bytes. We are shooting this episode on 12th of June, and the market, while remaining very near the all-time high, still being a little sluggish. So today's session on the Nifty, as you can see this last candle here, was an inside day. So an inside day is basically when the entire day is within the previous range. So this previous range was this candle, and these are daily candles, and today we remained within the previous day. So previous day remaining long here, and inside day being a indecisive day, where the next day could be a continuation on the down, or it may attempt to go in the other direction. We don't know yet, but nevertheless a good resting point after a ferocious couple of months. In terms of the Nifty heat map, pockets like IT, energy, some even the new recent IPOs in the last couple of years doing well. Then real estate doing well. So today's market was also some IT mid caps and small caps are doing well. So quite a reasonably market on the uptick, but the index not going anywhere. So the index was well balanced by the laggards versus the gainers. So Infosys, HCL Tech, TCS, Tech Mahindra all doing all right. Ultra Semco, Tata Steel, Grasim also gaining slightly. You had some banks uh, being flat, some on the down, but no real gain as such, besides mildly Kotak. Uh, ITC again a bit sluggish, along with Hindustan Levers, Reliance totally quiet, Coal India and ONGC also slightly up. In the power sector, NTPC doing well at 1.6%, LNT also down in infra at -1%. So overall sectoral chart, if we see, IT up at 1.5% for the day, real estate up 1.4% of the day, but most other sectors mildly up, with banking, private banking and pharma mildly down. So really, while the index has not moved up, yet stocks within the small and mid cap segments have been going up. So mid cap, as you can see, was moving up. In fact, it closed very near its recent highs and above the previous two closes also. Small caps also closing up at 10,229 after two successive down closes. So that is also doing all right. Nifty Bank remains sluggish. So this has been now on the sort of down tick for 3 or 4 days. Uh, until we break out of 44,000, I don't think we're going anywhere. Since 15th of May, Bank Nifty has net not done anything. So we've spent a month in consolidation, but that may be a good consolidation for going forward. Another few indices that we've included today is Nifty Next 50. So this has come back very, very sharply from its 37,000 position here in beginning of April, now at 42,870. Our product NNF10 is also doing very well since the last couple of months, behind this Nifty Next 50 index, although Nifty Next 50 itself is a good 3-4% away from the all-time high, but doing very well right now. Nifty Alpha is another index of 50 stocks that became very popular in 2021. There was one ETF also which was tracking this Nifty Alpha, which was moving very fast in those years. But recently, it made a bottom at 25,000 odd, which was more than 20-22% from the top, and right now it has retraced quite a bit, but still about 5-6% below the highs. So there are many indices which are still catching up. Some of the earlier, movers like Bank Nifty, like mid cap index, reached their all-time highs and are sort of consolidating there, while these other ones are catching up. So we always have, this sort of relay race that keeps going on in the market, where one segment of the stock runs fast in the first phase, then another segment catches up, then the third segment catches up, while the other ones wait, and then on the way down there is another dynamic totally different from this. Nifty Financial Services, fin nifty, which is also called, also has been consolidating since beginning of May. So you can see that there is no real trend as such in many of these indices, which have already reached near their highs. So now let's see how large, mid, and small caps have moved over a longer period of time. This will probably surprise most of you how the movement happens, and how the alpha is generated from within these sub segments of the market. So just to make clear, large cap stocks are essentially the top 100 stocks of the market cap list on the NSE. If we just look at NSE, then top 100 stocks are called large cap stocks. The next 150 stocks are called mid cap stocks, and everything below is technically small cap stocks, although within small caps, then post 500 you can call them nano caps and micro caps, etc. But largely this is the loose definition which SEBI follows. So now we have three uh, charts here, three lines. The large cap, in fact, the large cap is being represented by Nifty 50 here, uh, but it could have been Nifty 50 plus Nifty Next 50 combined together. Mid cap is being represented by the Nifty mid cap CNX mid cap index, and CNX small cap index is for the small caps, which is the blue line. Mid caps is the orange one, and black one is the large cap, represented by Nifty here right now. This is a 20-year representation of how they have moved over the last 20 years, from about 2003 till about 2023 mid. Now, what immediately you can see here is that Nifty overall has gained, and these are of course not inclusive of total returns or dividends. So, Nifty has the most amount of dividend in terms of percentage. Mid caps have a little bit less, and small caps have very little. So, assuming we are not looking at dividends for now, Nifty has moved about 932% in the last 20 odd years. Mid caps have moved nearly excuse me 1462%, and small caps have moved 1165%. So within now this 20-year range, you are seeing that there have been several pockets of bull runs and several pockets of flat or bear runs. So the pink ones are flat or down markets. The green one segments are sort of bull markets. So you can see, let's say for instance, the bull market going from 2003 to 2008. You see small caps running very hard, mid caps running next to that, and large caps the third. But in markets, when the markets fall down, you can see small caps fall the hardest, mid caps next to that, and the large caps below that. So after this first 6 years of a bull market and a bear market, you saw that they almost came together after this. Then there was a bull market 2009 to 11. Again, small cap rose the most, mid caps the next, large caps the worst. But once that stagnation period was over, in 2013, they were together by then again. Again, there was a bull market where small caps and mid caps did very well. Large caps were slow and sluggish compared to them. But by the end of COVID returns, almost they had returned back to the same point. And now although there was a stagnation period in the middle, but even if I assume this to be one run, then mid caps this time are running harder than small caps, and likely implication could be that maybe this rally has more legs to run and small caps will outrun mid caps at some point. And of course there will be some contra move down after, whenever the market peaks out, so on and so forth. So this is somewhat the usual picture what happens. The small cap index itself is not a huge outperformer, because the good stocks that perform in small cap index go to the mid cap index, and the good stocks of the mid cap index that really outperform go to the large cap index. That's how that relay race keeps happening. So if I look at from a tabulation of these periods, you can see that there are periods like March 4 to 7 where all three did very well, but small caps really did very well, 600% versus Nifty 50. Then there was a fall, everything fell, but small caps fell the most. Then there was a huge bull run again. Again, mid and small caps did much better than large caps. And then they fell, and then the mid caps and small caps fell more. Again, 13 to 18, 200% mid cap, small cap versus Nifty. Again, 47% and 62% fall in 18 to 20. So this pattern will keep repeating itself. uh, what we need to do hence is to capture that alpha of the mid cap and small caps when we get it, but not allow it to go back to where the large cap performance is. So for that you need a strategy where you will be able to exit your outperformers, even though you may exit after a mild fall, but you will not give up all those gains. So just like in momentum investing, in absolute momentum strategies, you will come to cash as markets start to fall, or in rotational momentum strategies you will rotate into more defensive stocks as the market falls. So you essentially, the idea is not to give back the gains entirely when we come back. So that is how momentum strategies are able to maintain that outperformance over the large caps vis-a-vis the mid caps, vis-a-vis the small caps. So this is how, by design, the momentum strategies are able to extract that additional return in every cycle. So first of all, you need to play through that cycle to really get the benefit of it, right? If you, let's say you start at the top of the cycle, then you have to allow the next cycle to play out. So if you came in pre-COVID, then you've seen one cycle. If you have entered after, let's say, June 21, then you are yet to see a full cycle. You will have to see a drop and then the next cycle to really get the benefit out of it. Nevertheless, so this is what is the inference out of this. We are continuing in this current block of rally. I think there is much more to go, but that is just a guess, because my assumption is that we have consolidated enough here between August 21 and now, and that the legs are there for a much larger rally. So insight, again, repeating the same what I've already done, I think, is always take a lead in bull rallies. The small caps end up losing a lot more. Alpha is certainly there in mid caps and small caps. And allocation to mid and small is a must if you wish to boost your equity portfolio. So while it's good to invest in large caps, and we also have several large cap portfolios. However, we want investors to also take on at least one mid and small cap strategy, so that that good combination of your core portfolio and your satellite portfolios can be built. So this is all I had for today's session. Thank you so much for watching. Do let us know in your comments what you liked or did not like about today's content, and we'll see you in the next one. Thank you. Bye.